several years, as we all know, the Naira has maintained multiple exchange rate systems, as we have the official rate being dictated by the Central Bank of Nigeria and other rates such as the NAFEX and the parallel market.
On Wednesday, the 14th of June 2023, the Central Bank of Nigeria introduced a unification policy. This unification policy saw all exchange rate windows collapse at the investors and exporters windows. Essentially, what this means that the exchange rates were collapsed and were then quoted at the Nigeria Autonomous Foreign Exchange Market rate, which is NAFEX rate. At the NAFEX rate, exchange are allowed to free float based on the willing buyer and willing seller principle. And the immediate implications of this was that we saw the Naira exchange for the dollar closing at over 700 Naira to dollar on the next trading day, with the Naira losing over 60% of its value.
On the 12th of October 2023, the CBN issued a circular notifying market participants of the removal of the FX restriction on the 43 items that were previously banned. Now, this removal of the FX restriction is to reduce the pressure we are seeing in the parallel market. However, it is unlikely that this move will solve the FX issues in the short run until the Central Bank of Nigeria is able to intensify the supply of foreign exchange. In coming weeks, we are expecting $10 billion FX inflows, which will further improve the liquidity and stability of the Naira.
Given that the Nigerian economy is a consumer economy with a lot of our raw materials externally sourced, this will further lead to pressure on the foreign exchange and lead to the Naira falling massively against the US dollar in this particular case. Another important factor is that the government of Nigeria owes over 43 billion US dollars in foreign debt, and this means that the loans would have to be serviced in foreign currency, which would also further create pressure on the demand for foreign currency. The future indeed looks gloomy.